Good morning, good morning. How's everybody doing today? Nice to have you all with me today. Wow, big moves happening in the markets, isn't there? A lot of moves are happening these days. And we just did a really in-depth report for members, the usual report, where I go and examine all the latest CFTC data and look at the charts, the supply and demand that is taking place on the charts created by the banks to determine what is likely about to happen in the markets. It gives us an idea, a big picture of what the institutions are doing with price and why they're doing it, and what it's likely going to lead into. So a lot of information, a lot of details in that report. We're going to just skim through some of the basics of what we have discovered in our analysis, and go through that with you today. All right. So again, welcome. Nice to have everybody here. It's been a little bit of a while since we did a live session. I think July 27th or something was the last time we did a live session. So it's nice to be back and be able to interact with you guys. If you have any questions, just shoot them out in the comment section or in the chat box, and I'll get to them when I get a chance. Okay, so let's start by taking a look at I did a snapshot here of the sentiment held by retail traders. Okay, this was August 7th, the one on the left, and August 16th, which is today. Okay, so it goes to show you what the retail traders were thinking about a week ago and what they're thinking now. Okay, just over a week ago. All right, what they were thinking just over a week ago and what they're thinking now. Why is this important? Well, it's very important because it'll tell you what direction the banks are pushing price. So the first thing I'll mention is we've talked about gold numerous times, and we've talked about how at the highs of price, retail traders were suckered into getting into long positions. Why was that? Well, because the banks had a massive long position and they needed to offload it somehow. And what better way than to use the war as an excuse? Okay. So, that's what happened up here. February 24th, the big announcement, there's a war, and everybody started buying gold. And what happened? They offloaded their long positions right here. Now, after they lured retail traders into getting in long, what do you think they did? They forced the market to the downside, right? And then down here, they lured retail traders into getting short. And then what did they do? They pushed price up. And then retail traders got lured into getting into long positions here. And then what did they do? They forced price down. And then retail traders got lured into getting in short down here, okay? And what was I saying in the last report or 2 reports ago? Watch what's going to happen. They're going to push price up, and then when price is at the highs here, when price is entering into an institutional area of selling, what do you think the retail sentiment is going to be? They're going to turn it bullish. Retail traders are not going to realize what's going on. They're not going to realize that this move to the upside is likely going to stop at institutional supply. All right. What is institutional supply? This area here, people ask me, what is supply demand? What's going on here? What does this all mean? Well, it's a way of looking at the charts to determine where the big institutions, the big players, the ones that actually move price in the markets, where are they filling in their orders? Okay. Because if you're making decisions to buy and sell a market based on the news, you're going to lose money. If you make buying and selling decisions based on fundamentals, you're most likely going to lose money. The only way you're going to make money in this business is to follow what the institutions are doing. Okay? Because the big institutions are the ones that move the markets. That's why price dropped from up here to down here. Because the banks pushed price down. Period. Nobody else pushed price down. from up here to down here. Okay? As much as you'll hear experts say it dropped, and here are the fundamental reasons why gold dropped, and because of the dollar and the interest rates and all that nonsense. Because as price dropped, guess what? Retail traders were never in a winning position. They constantly lost money, including the shorts that they got in down here. Now, when they saw this rally up, they got shaken out of those short positions, and now price is hitting this area. What is this area? This is the latest area where the banks were filling in a massive amount of short positions. All right. So if the banks are selling gold at this level between 1810 and 1847, don't you think that that would be a good area to be getting into short positions? I mean, there's nothing guaranteed. There's nothing guaranteed that since they were selling short here, that next time price gets up here, they're going to sell short again. There's no guarantees. But wouldn't it be higher odds to sell something where the institutions were selling it, as opposed to buying something where the institutions were once selling it? That wouldn't make much sense. And what do you think retail traders are doing right now? They switched their bias from short to long. So not really surprising. We're entering into an area where the banks were selling and retail traders are thinking about going long gold. So now look at this big drop in price. Are we surprised? Not in the least. Not in the least. Okay? And here's the interesting thing. A very, very interesting thing. When we look at gold and we look at their positions, there's a reason why price rallied from the lows. And it's not because the banks were buying. It's because the banks were closing short positions for profits. Okay? So when you flood the market with closing of short positions, guess what? It causes the price to rally up. So this rally up in price, so you think about it, right? If you sold short, you have to buy to close your position. So you flood the market with buys, guess what happens? Price rallies up. And so this is exactly what happened down here. Down here, the banks took profits on their short positions, and that is what caused this rally. So as the banks were closing short positions for profits, causing a move up, the retail traders saw this big move up and they said to themselves, oh boy, maybe we've gotten into the wrong position again. Let's close off these short positions and get into a long position. And then look what happens. Okay? Right into an area of selling. So that's what we're seeing. That's some of the key things that we need to point out with respect to gold. And so it's very likely what's going to happen based on the fact that price is entering into an area where the banks were previously selling, is likely we're going to see selling again. Now, is that selling going to be sustained to a point where we're going to see a massive drop in gold? That's the big question. So if you think that, yes, there's a very good chance that this move to the downside is going to be sustained, then you can open up a short position. But if you think there's certain risks involved with opening up a short position here at this level, then you got to adjust your size accordingly. Would I want to go into a full position, 5% risk on my portfolio into a short here? No, I wouldn't. Would I tiptoe in slowly and see if it wants to sustain this move to the downside? Yeah, I'd be willing to do that, and I am doing that. All right. So that is what I am seeing with gold. Okay. Now the next one I want to talk about is the euro. Take a look at the euro. About a week and a bit ago, they were a little bit long. Okay, retail traders, you could see here, they were a little bit long, but look at how much more long they've gotten since. All right. And just like with gold, when we look at the euro chart, let me bring it up here. There we go. When we bring up the euro chart, guess what? Price drop down here and at the lows start to reverse, and move upwards. And when you look at what's happening with the dollar, very, very interesting thing, okay? Let me show you this. The dollar. Let me show you this chart. You see that? You see this here? You see how I have drawn this in green? Do you know why I drew this in green here? Because again, this is an area that we located as a zone that the banks will be interested in buying the dollar. So price rallied up, came down, and look what happened when price just touched that area. The second price just touched that area, guess what? Institutions came in with buy orders. They bought so much that it's caused price to rally up to here. So if the dollars are going to reverse, regardless of what's happening on the euro chart, it's going to reverse. And that's what happened. So as retail traders are getting in so long the euro, they're reversing the euro and dropping price as the dollar is increasing, as gold is contacting its supply area. So one thing we always like to do when we do analysis is we want to make sure that the markets are correlated, because we know that they're all linked together. Euro drops, gold drops. Gold drops, dollar rallies. And so if we can time these movements with specific buying and selling areas created by the banks, then the odds of a move taking place are just that much more higher. So we're seeing that the retail traders are getting more long the euro when the banks are starting to sell the euro. They're getting more long the pound, just as the pound rallied into a selling area that I pointed out a couple sessions ago. Remember the pound? I said, well, if I had to short this, I would short it right here. You remember I mentioned that on the pound? Do you guys remember the area that I pointed out? Right here. This is the area. I said if I had to short it, it'd be right here. Why is that? Well, because that's the area where the banks were selling. Simple. That's simple. The banks are selling there. I want to sell there. Okay? That's how you increase the odds of winning in this game. You do what the banks do. Don't do what the media tells you. Don't do what the experts tell you. Don't do what conventional technical analysis suggests you should do because price is hitting the upper edge of the Bollinger Band. I mean, this is ridiculous. Okay? You may be able to scrape a few pennies by doing stuff like that, but you're not going to win in this game over a long period of time. Okay? So, pound, they're getting into more long positions, like I was saying. Look at the US dollar, Japanese yen. Okay? Pretty much untouched, except for the fact that they're getting in a little bit more short. A little bit more short. USCAD, they're getting in more short. Look at the Aussie. Okay, somewhat unchanged. Same with the Kiwi. That currency has been a little bit more off of what the rest of the markets have been doing, but they're getting in more long on the US Swiss. Okay, but gold, definitely more long. Definitely more long. Okay, so what about the positions? What are the positions telling us? Okay, so we went through gold. Pretty significant information, right? Oil is going to take some time for it to play out. We've talked about this in details about what's happening on the higher time frames. So this one's going to be taking some time. But the thing that I will point out, okay, the thing that I will point out is if you take a look at what's happening here with their long positions, what do you see? What kind of a trend do you see here? Look at their long positions. From early January, 484, 503,000, and we're down to 338,000. Okay? So all of 2002, the banks have been basically closing off long positions. So all this move that you see here, closing off long positions. Now, why would you want to do that? Why would they want to do that? Well, because they added their long positions, remember, down here? Okay, that's not a bad deal. Getting in at $20, $0, and then selling up in the hundreds, and 80s and 90s, not bad. So all this year has been profit taking on long positions. That's what the banks have been doing, profit taking on long positions. Now you can see when you look at short positions, what were they at? 129. They're at 127 now. They're not focusing on shorts right now. So if you're wondering what the heck is going on with oil, it's the banks are taking profits on their positions. That's it. Okay? So it's not a time to be engaging yourself into this market. And if you take a look here at the sentiment, look at the coloration of these cells here. You see how they're bluish? They used to be green. They turned more bluish now. That means neutral. If the banks are neutral, you be neutral. If the banks are bullish, you be bullish. If the banks are bearish, you be bearish. That's why I created a color code scheme on my spreadsheet, was because it is an indication to me whether I should be considering trading something long, trading something short, or not trading it at all. And as we go through all these assets, I want you to look at the coloration of the cells. The coloration of the cells will tell you a lot of what you need to know. Look at the dollar. Okay? What's the coloration of the cells? Green. What does that tell you? They're bullish. Okay? But what was it before? Look at long exposure. 89, 86%. We're only at 81. Why did it drop? Well, I'll tell you why. Because they reduced their overall exposure of longs. That's why. Why did they reduce their overall exposure? Because price rallied up into, guess where? An institutional selling area. Okay? We've pointed this out before as well. Right here. Institutional selling area. Price hits an institutional selling area. Guess what the banks do? They take profits on long positions, reduce their exposure, which causes price to decline. Isn't that what we saw? Yes, we did. Decline right into what? An institutional buying area. Now it comes down to this. And this is what we teach at the school at the higher levels. You know, the level 1, you learn about supply and demand, how to locate it, what it means, how to draw it, all that good stuff. Level 2, the structures, trends, breaking out of trends. What does it mean? Why do we care? Level 3, here's the good stuff. Institutional supply comes into play on a monthly chart. Institutions take profits on their positions. It drops price, but it drops price into an institutional buying area that we located on the weekly chart. Now, which one's more stronger? Which one's going to come into play? Is it the monthly supply that's going to come into play? And if it does, has it already come into play? Has it already been played out? Now that the weekly area of buying has come into play, are we going to see price continue to the upside? What are the things that we'd be looking for on the charts to help us determine that this weekly area of buying is going to come into play and force price to the upside? These are little details that we discuss. So just pointing that out, all right? Longs are still aggressive. Look, you see the redness of the cells? The reason why I color-coded this in this way is because if the cells are red, that means they're being aggressive with their positions. If the cells are blue, that means that the positions are cooled off, meaning they're not something that they're focusing on. So just by looking at the coloration, what does this tell you about the dollar? Are they focusing on shorting the dollar? No. What have they been focused on? Accumulating an aggressive long position in the dollar. So what does that tell you? Just by looking at what the banks are doing, what does that tell you? That tells you the dollar is likely going to go higher. Okay? So whatever else you read and see, and whatever else any other experts tell you, you have to understand that the banks are mostly long. Okay? They're not focusing on shorts. So if you read articles, the dollar's going to collapse and all this sort of stuff, you have to ask yourself, well, if the dollar's going to collapse, why aren't the institutions shorting the dollar? All right? If they're buying the dollar, don't you think they would need articles out there saying the dollar's going to collapse so that everybody can sell it to them? Yeah, you would need that, wouldn't you? Aussie, they've been focused on shorts for quite some time. We just reacted to an institutional buying area, hence the reason why you see price rally up the way that it has been. USCAD, focused on shorts. Longs are very cooled off. Didn't we see a drop in price? Yes, we did. Okay. Look at the US Swiss. Longs, the main aggressive position. But just recently, back in June, it was very cooled off, their positions. You see that? You see the coloration of the cells down here? How cooled off they were? And recently becoming aggressive. All right? Somewhat aggressive. Look at short positions. You think they even care? Yeah, they increased them. That's why we got the drop in price. But still very cooled off, considering. So it's about putting things into context. You can never just look at the positions and come to a determination without putting it into proper context. And that's what most traders miss. First they're looking at the commercial numbers, not non-commercial, because all the books tell you to look at the commercial, which is the opposite of what you're supposed to actually be doing. It's the biggest scam I've ever seen when it comes to CFTC data. You look at the commercials, you're going to end up doing the opposite of what you should be doing. And isn't it just happens to be the case with trading? They always try to get you to do the opposite. So the euro, here's one that I like, okay? Because when you look at the positions, what do we gather from here? Okay, there's a lot of information, like I said, that you can gather from here. First things first, net positions. What color are their cells? The cells are red. What does that tell you? They're bearish, period. Okay, so when you consider their overall positions, long versus short, they are more short than they are long. And this is by 34,000. Okay, so they're bearish. All right. The next thing that you got to pay attention to is the coloration of these cells here. Okay? Just because they're bearish, it doesn't mean that the sentiment right now is bearish. Look at the coloration of these cells. They're blue. What does that tell you? Neutral. What does that tell you? You shouldn't be trading the euro right now. Take your foot off the gas pedal. Don't be trading it. All right? When these cells start to turn red and net positions are red, then you know you put on the gas pedal. Then you know you start entering into positions. You look at the charts, you find your entries, you find your points where you want to get in, and you go with the flow of price, with what the banks are doing when the momentum kicks in, because this is going to show you momentum. The coloration is going to show you momentum. Okay? All right, so look at these positions here. Look at long positions, 200,000, and look at short positions, 234,000. Now, shorts are more aggressive. Shorts are 234. Their all-time maximum size that they've ever held short is 271. We're pretty close to that. Okay. Longs, 200,000 versus the max size, 266. We're not as close as what shorts are, but we're getting up there. Total size is 434. We're pretty much at max size right now, which means one of their positions are going to have to go. If they're so long and they're so short, maximum size is just reaching their max. Their total size is reaching their max size. One of them is going to have to go. This is what typically happens. So we have to determine which one is going to have to go. And that's why the sentiment is neutral, because they're so overloaded with positions that they really can't push price in any strong direction. If we start to see long positions decline and short positions continue to increase, then guess what? Price will drop. Okay? They could close their long positions and price will drop because they'll be flooding the markets with a lot of sell orders. So, this is going to be an interesting one to see how it plays out because of this dynamic that we've got going on with the euro. All right? But keep an eye on these numbers to see which one declines. Because whatever one declines, there's going to be the bias to the opposing position. All right. All right. So let's go to the next one. We got the pound. Look at that. Very short. Have always been short. They've never changed their mind. Just recently they added long, and guess what? We had price rally into where? Their selling area. Okay? Just as I had suspected would happen, and then we saw a drop in price. Okay? No mystery here. They're pretty clear with their direction and their bias over here. But again, look at the long and short. What color are these cells? Blue. Okay, which tells you we're kind of entering into neutral territory. Just recently they were red, which means they were bearish, but now we're entering into neutral territory. And isn't that what we're seeing on the charts? Price was dropping, and then what? They turned price to the upside, right? And again, are they doing the same thing that they did with the euro? Yes, they are. Taking profits, not the euro. What was it? The gold. Taking profits on short positions, okay? Taking profits on short positions causes it to fuel price to the upside, along with the big boost in long positions last minute, and price rallies up. But the coloration is blue, neutral. So take your foot off the gas pedal. Don't make any significant moves when it comes to the pound at this point, okay? Wait to see what they do with their longs, wait to see what they do with their shorts, and see how price reacts to that area of supply. US dollar, Japanese yen, look how long they were, okay? And we saw the big push up. There's no mystery with that, right? Big push up, look how long, and then what? Didn't they take profits with their long positions on the dollar? Didn't they reduce their exposure? Isn't that what we were saying? Yeah. Look at the coloration of the cells here. They were bullish, bullish, bullish. On June 7th, it was time to take your foot off the gas. Okay? June 7th was June 14th was when they started taking their foot off the gas. Okay? June 14th. And you look at the US dollar, Japanese yen, and June 14th is here. That would have been nice to know when to take your foot off the gas pedal with long positions on the US dollar, Japanese yen. You would have, didn't they say you can't call tops? You can't call the tops. You can't see the tops. Well, you know, looking at our indicator on our spreadsheet told us, hey, this is a good time to exit this position here. Why? Because the indicator is telling us. Okay. We had so green here, sentiment very green, and right here is when it starts to get a tinge of blue. You see the coloration in the cells there? Tinge of blue, and it's been blue ever since. Okay? Mostly blue ever since. And what's been taking place? The drop in price. Okay? Neutral. They're not focused on pushing price to the downside. They're not focused on accumulating to the upside. When the coloration of the cells start to turn, then we know it's a good time to start looking for entries. And last but not least, we got the Kiwi. Again, price contacted our institutional buying area that we located. This is where the banks were interested in buying. That's exactly what took place. And look at the cells. Were they bearish? Yes, they were. Yes, they were. But now, early indication, June 14th again, was where? Probably right here, near the lows. When the coloration started to turn blue, that means take your foot off the gas pedal. Likely we're going to see a different thing transpire with price. And that's exactly what took place. Isn't that quite remarkable? Quite remarkable. And that's pretty much it. That's what I want to share. If you have any questions, let me know, and I will address them. Otherwise, I think I will let you guys go. So I'll wait for your questions. And if there aren't any, then we'll keep it short and sweet. 30 minutes. We covered all the data, all the key things you need to be focused on, and now you are better prepared. All right. Any questions? No questions. Awesome. All right, guys. This was great. It was fun. I appreciate you being with me today. And enjoy the rest of your day. We'll see you in the Telegram channel. If you're not in the Telegram channel, you got to look us up. All right. And you can find out information about our Telegram channel and what we offer, www.whiteoakfx.com. Thanks, everyone. Have a good one, okay? Take care.